Now, public company. Now, before we go public company, then we see about a public company. What is a public company? A public company means which are being run and governed by a government sector is known as public company. Public company means a company which is not a private company. Just now we have learned about what is private organization and has a minimum paid up share capital of 5 lakh rupees of such higher capital may be prescribed. So, to start up a public organization or a public body, you definitely need this 5 lakh rupees as an investment sector. Then only you can say that, yes, I owned a public company or public limited company. So, whenever you are writing up, like say, suppose just now I took an example of Swapna Trading Company. No? So, it is private limited or public limited. So, definitely you have to mention this which type of organization it is. Either it is a public limited company or a private limited company. So, before then we have to see this features of public limited company. Now, the securities can be traded on a stock exchange of a public company. What is the securities? Issuing of shares, debentures to the public market. That's why we see many advertisements. Like example, I can give you tenders. We see this construction of a road or construction of any buildings or any construction of any government bodies or anything. We issue this tenders notification, right? Whomever is interested, whomever is involved, want to be part of this public company, yes, they are welcome with the tender notice. So, that can be exchanged, that can be issued. Public companies have to publish their financial prospectus so that the investor determine the true worth of the shares. Now, as I told you just now, suppose I want some capital of 5 lakh rupees to start up a public limited company. I may not get money from my near dear ones or friends or banks or pawnbrokers. What should I do? To this capital, I issue shares to the public saying that whoever wants to be part of my organization for one share at the rate of 10,000 rupees. Whoever are interested in your company, portfolio or anything, they can purchase these shares. Like might be 3, might be 2, might be 10, or might be some other person is purchasing 2, or might be other person is purchasing 1. So, all these people who has been a part of your business in your capital investments, those are known as investors. Okay. In these investors, we call it as these are profit sharing ratios. Means on the profile, we says that higher the value capital may be prescribed. Means we should have a minimum paid up capital. Like example, to start a business of a public company, you need 5 lakh rupees minimum. Okay. So, this is the basic features of a public company. Now, to start a business, we have learned this how to start a public company and a private company. But this is not at all enough. We are having more different such bodies where it plays a key role either from a public company or a private company. What is that? Another type of business is statutory bodies or statutory companies. Now, a company incorporated by a special act of the parliament, any state legislation is called statutory bodies. Now, to make you more simplifier, what is the statutory bodies? For someone help, for someone recognition, for someone's identity, these bodies or this startup business has been formed is known as statutory bodies. For example, suppose say imagine there is a floods in a state. To help the people who has been in the floods or who has been suffering with the floods and everything, I start up a business to help these people of needy. Now, these bodies, whoever is being in the part of it, either in the form of distribution of water, or either in the form of distribution of food, or first aid, medical emergencies, or anything, for the temporary sake or accumulation of the people, these people has been start up the businesses or start up their organization for a temporary sake under the help of the people, means under the service to the people, or service to the nation, or service to the needy people. Those bodies or those type of businesses or those type of companies is known as statutory bodies. Example, I can give you one more. Gramina banks. Okay, all these chit funds or agriculture development organization, means these companies are set up for a time period. After the time has over, they finish this task and they help the people. It is enough. So those companies are known as statutory bodies. In simple terms, for the help of the people, for the needy of the people who has been starting up the businesses. Okay, those are known as statutory bodies. Either the the orders might be given by RBI, or the orders might be given from the government, or the orders might be given from the any private organizations also. Suppose, say, example, in the midsummers, we see this water outlets, no? So everywhere in the city, whoever wants this, like to help the people, we have this water outlets every 100 meters or 200 meters. Who is going to responsible of this? Who is going to pay them? Who is going to be like everyday maintenance of it? So those type of companies are known as statutory bodies. They are governed by the act through which these are being created. Such companies are formed to carry out some special public undertakings. Like, can give this? RBI can give this permission, or life insurance corporations, etc., are the examples of statutory companies. So, for the benefit of the people, for the needy of the people, for the usage of the people, we are running such type of companies are known as statutory bodies. Okay, so now it doesn't even come under public organization, or it doesn't even come under private organizations. For the need help of the people, for the accomplishment of a period of time, or might be the entire period, we are running this type of businesses, or you can say this NGOs, or life insurance, Gramina banks, or this chit funds. All this comes under statutory bodies. Now, next, limited liability companies. Now, the word itself is very clear, that is limited liabilities. What is this liability? Liability means the company is responsible only to the amount you have been invested, not to the amount entire by it, only to the value of its things. Now, these limited bodies are of two types, that is company limited by share and company limited by guarantee. Now, what is this company limited by shares? A company having the liabilities of members limited to the value of the share held by them in a limited by shares is known as limited bodies. Example, suppose say in a company XYZ, I own 10% of the share value. I only own 10% of the shares. Now, when the company is winding up, when the company wants to close down its all the activities and they want to share the profit and loss, I am going to only responsible of the 10% of the share. Not the entire capital. I am least bothered of it. I am only concerned of this 10% of the share value. So, that company is known as company limited by shares. How much share value I am owning? 10%. So, how much I am responsible? I am only responsible for the 10% of the shares by the share held by them in a limited by shares. The shareholder personally assets are protected in the event of the company insolvency. Means all my personal personal assets, whatever which I'm linked to my family members might be, or to me, it cannot be involved in the businesses. I am separate and my investment is separate. So when the investment is only about 10%, if the company wants to pay back my 10%, I am only concerned about the 10%. It only asking me to give the 10% of the amount if I am invested, but not the entire assets. Whatever the assets I am having, it cannot be recollect or it cannot be taken into account of my assets. That is known as committee company limited by shares. Okay. So simple fund or simple logic to remember, whatever the company is having and whatever I am earning in the company, that only I am responsible, not the entire thing which I have. Okay. So all my assets cannot come into conclusion or cannot come into count. Only the amount I am invested in the business, that is going to be into calculation. Okay. Next, limited by guarantee. So what is this limited by guarantee? Example, a company having liability of its members limited to the guarantee amount which they are promised to pay on winding up is known as limited by guarantee. Means the amount which I have promised to pay into the businesses, whatever the circumstances comes, all my assets can go off, all my things, like whatever the uh, assets or anything which has properties on my name can be come into accountable. Okay. So whatever the share values I am having, it should be accounted, means it should be come into calculations. So when the times of winding up of the company, say suppose, example, I'll give you a small example. Suppose I borrowed 10,000 rupees, 10,000 rupees from Ram. Assumption, now I promised Ram that Ram, after 1 week of time, I am going to pay you 10,000 rupees. So Ram has a guaranteed, or Ram has promised to X, saying that I have to give you 10,000 rupees within a week. Due to some circumstances, due to some problems, Ram couldn't pay those 10,000 rupees to X. But every day, X is calling Ram saying that please pay back my money. I need of it. I want to pay somewhere, or I am answerable to some other person. So X and everything. But this this clause is known as limited by shares. What is the share value Ram took? 10,000 rupees. How much is answerable to X? That is 10,000 rupees. So, when the times of agreement, what is now, I hope you understood what is limited by limited by share. But when it comes to limited by guarantee, Ram has to supposed to pay 10,000 rupees to X. Ram couldn't pay those 10,000 rupees. Now, what has X has done? X has directly went to Ram's house and he told the entire story to his parents, saying that Ram has borrowed from me 10,000 rupees and I need of it urgently. Now, the parents are feeling responsible or feeling so they has to pay this amount. So, who is paying this amount to Ram? Sorry, to X? That Ram parents or Ram beloved ones are paying this amount. This is known as limited by guarantee. Okay. So, in case you can take n number of examples, whenever you are taking a bank account also, the banker will ask you, I want any person who has been already having an account in this bank as a guarantee. Okay. So, this is known as guarantee. So, not only your personal amount, your parents has also involved in it by collecting those money to X. So, that is known as limited by guarantee. Okay. Now, holding and subsidiary company. Now, very, very easy, holding and subsidiary company. Now, if any company controls another company by holding a minimum of 51% of shares and controls the position of the board of directors, is known as subsidiary company. Means you have to remember this 51% of the share. Suppose say I initially I was a 10% holder of a company in XYZ. There was a company called XYZ. So in this XYZ company, I took 10% later on after a period of time like 2 months or 3 months. This 10,000 has been increased to 30%, and later on someone has a director of the company, he is selling his share value, so I purchased. This 30% has become 60% of the company. Now, and the old proprietor of the company having this 60% of the share value of the company. Now, almost more than 50%, I am responsible of controlling the share value of the company. So, why I am has been invested? Because the initial amount of the company which the capital is running or the operations is running has been invested by me. So, the share value of me has been increased more than 51% according to the Companies Act, saying that whoever is having the more than 51%, they will become the majority decision maker of the company. They hold the company's positions. So, example, Gramsci Ultratech and Tech Work and TVS. So, what is this? In those days, example, I can take you one more examples, which is very common to us. The word itself is known as amalgamation. Okay. Now, what is this amalgamation or interpretation? Amalgamation means, like say, suppose XYZ company is there and ABC company is there. Both are into manufacturing of units. ABC company is a small organization and this is a bank assumption. Okay. Now, what is subsidiary company? Simple term, simple for a simple logic. That is, any company which is owning others companies 50% of the shares or the capital, then we have all the right to direct the board of directors. Means the decision making, the operations in the organization or the management sectors will be run through the holding company. For example, say suppose XYZ company is there and ABC company is there. Both these companies are doing the same type of business. XYZ company is holding or giving funds to ABC company. Now, initially, XYZ is always giving funds to ABC company, and XYZ is came in a position of holding 51%. According to the law, says that 51% of the shares, if XYZ company is holding, then the financial position, the decision making or the operations of ABC will be taken by XYZ company. Now, both these companies' operations will be who is going to take XYZ company. Example, Gramsci and Ultratech, or you can take this network and TVS. So, whoever is holding company means holding company, if he is holding others persons XYZ, sorry. So, holding company is holding ABC ka shares or more than 51%. Whoever is going to take the decision? Yes, holding company, whoever is having more authority or more share value of other company will be taking up the shares. So, what is this holding and subsidiary company? The company which is holding others company, example XYZ is a holding company and ABC is a subsidiary company. Okay. So, on behalf of it, we are taking actions. On behalf of it, we are going to take the necessary precautions, necessary decisions, or the board of directors. Everything will be done by the holding company. Okay. So, I hope this is easy.